Hello and welcome as we are entering into the 18th day of December 2020. My name is Derek and this is the Money Charts channel where, like always, all bets, trades, and of the like is within each his own risk and their own reward. We'll take a look at Litecoin in this video, first against the Bitcoin, then against the dollar. All right. I got this set pretty much from the start movement days. This is 2014 in here, halfway through, or even early 2014. Yeah, early. So we're looking at about 7 years worth of data now, Litecoin and Bitcoin on the cross. And within it, what can we say about all of its rallies? And there really hasn't been too many of them. Some things I've noticed, what's the top of this range, like 32 handle? Not really, I mean more like 20. Like 20 handle, 200 handle on the bottom of this range, which we're at now. And this is only like really the second test of it is, well, regardless, 5x move in 7 years with a cross of one crypto versus another. Not that volatile overall compared to what the rest of the combinations can be like. As it goes, at the start, big down move and then up fast. Big down move. I'm going to forget this, although this was somebody making a huge sell at the time within the order book. But big move down, huge move up. Lots of interesting volatility overall, but big move down, or that was a big move down here, but big move up. Interesting, nice move up here, a little failed rally on this here, and now it's just been all the way down. A little bit of a failed breakout here. I think what's of note is that, and don't be surprised if at any given time this thing goes back up relatively quickly to like the 80 handle, 120, 130, 140, whatever. That I expect to come into play. If it doesn't, it doesn't. But I mean, I think there's a decent chance in which things like that will take place. Looking at this at multiple time frames daily, this market is being very, very volatile. It's interesting to say the least, as we I had this little bit of a range in here, price action, and then kerplunk. But some of these moves in here, really since here is what I've noticed it. Just the size of these moves, but even more so in this run here, you have this up move, down like this. And even how you have down, 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 so many times. Then this complete V-shaped formation here, and then to do it like this. And outside, well, I guess, yeah, this was an outside day yesterday. And an outside day with price action going below the 18 lows and highs and then closing a bit above it. And it's 8:22 p.m., December 17th as I'm doing this. So the market is, for the day, 1 hour and 22 minutes into the session. So when we get to the hourly time frame, obviously that's an uptrend big time now because and within the last 2 hours, the Litecoin is up 5.92% already against Bitcoin. 4-hour term time frame. And volume is increasing. Now this is Poloniex' chart, and I guess I can change it for the short term for that of Binance, just for better chart sake now. But as it goes in here, there's a little bit of sideways correction in here. And then the big volatility. Up move, down move. So the movement has a 437 handle go down to 410. About 5-6 or so percent. And then, this is even the 1 hour. I already know what that looks like. So I'm just going to show it now. Just interesting. Sick movement. And then first there's a little bit of that failed just this move in here, just showing a lot of the sick move. And then this hour here alone up 7 and 7/9%, 7.77, a slot machine hour, 5 o'clock in the morning, December 17th, 777 indicating that's the number for that. But this is a good setup here as I look at it. You go to this high. I guess the US dollar is going to look just as good too, if not maybe a bit better. I've already looked at that too. Come down this low. So we retest previous high and pierce extra. Retest previous low. Retest previous high. Pretty much a perfect hit to the first one, piercing lower than from the last one. Retest of previous high. And now we've pierced above even this one barely. As it's exiting above the 18 like this. You know what? I like the setup like that. So with that being said, let's now take a look at this against the dollar. In the 1 hour time frame, using the Coinbase exchange. Interesting volume in here right now. We can see this volume in here compared to what preceding it. Volume starting right on this breakout here. And it really hasn't stopped. It's just been continuing. That's another big reason, I guess, for a lot of this volatility moving in. But this is only a couple days worth too, hourly time frame. But from this rally point, it's been phenomenal. So can we explain what's happened from this whole run? Well, this was entire sideways consolidation from a decent sized movement. And I remember I do got Fibonacci lines in here, so I'm glad I remember that, because I do not want to delete them. And then we have an attempt, of course, most certainly successful, 5 a.m. to break out as it gets above the 18 average of highs. 2 periods to follow thereafter that, amongst sideways consolidation. And then for 4 consecutive periods, first one up 4.25, then 2%, and then we're up 1%, and then we're up 1.8. So nice little breakout above, extending well above the 18 average of highs. And then up to $90. And then a little bit of a sideways move. There's some more gains, extending the gains up to 93. And then over about, half a day or so, from 1900 hours December 16th to 4 hours on December 7th. So 5 plus 4 is 9. So for about 35% of it to 40% of a day. And then a big breakout hour, 7.5%, 5 o'clock this morning. And since how has it reacted to that breakout hour? Oh my goodness, huge. 3 periods going sideways, and then 3 periods to extend the gains even further up to what has been a huge move at 11 o'clock this morning, in at exactly 110 on Coinbase. Then correctionary phase, starting at noon Eastern time. Price comes back down with a 6.3% down move against the dollar, so big volatility, to the 18 average of rising highs. And then for the next 7, it looks like 7 periods after that, it stays within the 18 average band, supporting the lows really well and resisting the highs as well too. But it stopped resisting it on this one. 31 minutes to go, pretty much at halftime. Exitation amongst the 18 average highs again. So at exitation here at 5 o'clock, you can kind of say here as well, because it came down to the side. It attempted exitation here, this one here, because it comes back down to the band. If you were to look at, I didn't want to do that. So if it makes much of a difference, but I just wanted to scroll it back. You can see how, it's attempting to break out. And it was successful, even though it took time, because it had to go sideways for a bit. And then you have a move that does it again. So here we are, attempt to break it. We'll see what happens. As it goes, I'm expecting this to go. It's on route to 136. Why would I think anything differently? I've done a lot of work to be able to understand mathematical Fibonacci through all these years and see how it's placed in history. And see whether you have resistance at an area or not, but when you convincingly break a key level, and it did resist it here on the August 17th session, the 68 handle. But in November 16th time frame, it got above it, supported it the following week, and even a couple weeks thereafter, supporting it pierce a little close to it. And now you've got exitation of a major resistance of $92. Well, this is prototypical. We're going to 136.61. Probably piercing extra. 140, 150. What we do after that, We'll see. Next key resistance level is 209. And then breaking that, we're talking about 400. And then breaking that, 4 figures. It's a crazy, crazy world in which we are living in. And yeah, I wouldn't be surprised if these things just continue to go off, a big melt up amongst a lot of different things. As I've been doing a lot of videos recently, I talked about the stock market, I think is going to go up, precious metals going up, and of course cryptocurrencies as well. And all against what? Up against the dollar. The fiat dollar. Oh, that adjective is so important. Fiat. For adjectives explain, like a noun being dollar or currency. Sometimes it's dumb to give an adjective of truth to something. Wet water. Yeah, I know it's wet. Okay, well, in case you didn't, it's wet water. Fiat dollar. See, most people don't know what a fiat means and the aspects of it, but most people in this world do know what a wet means and what it's like with wet water. Sometimes an adjective is needed, sometimes it's not. And I know a lot of people watch this video over and over, and you know what a fiat currency is. So when I say currency or fiat currency, I think it's the same thing. But if you don't know what it is, or it's important to at least understand what that adjective means, and that, okay, well, it's a currency that is pretty much created by central banks, backed by nothing, where they can just print it out of oblivion, then okay, that's what it is. And why is it important in examples you're talking about? Well, if you're an investor, of course, well, a reason why is because when you create currency, where does it get its value from? And that's from everyone else's holdings. Because it's the exact same fungible item. So you know if they keep doing it, those things are going to lose value, and then of course prices are going to go up. And then you're in a situation right now where people are spending currency versus not spending currency, or saving. When you are saving, that means the supply of fiat currencies to be distributed amongst the world to buy things isn't as much. So it's lower. And that means that the prices of things go down. And there are 2 reasons why spending is going to be going up. Overall confidence in the world as whether the vaccine is true or not to be effective. As long as people believe, and that's what it all comes down to, the belief of people. Oh, everything's going to be fine, so they can just start spending and buying things. So supply of their currency, especially if they've been saving for a while, goes up. And then the biggest one, the granddaddy of them all, is when they just don't want it anymore. That of, I'm going to use the adjective, fiat currency. They don't want it, so they buy what? Of course, investment-wise, is they got your gold, silver, your Litecoin, your Bitcoin, so many other things. There's things they got to get, and whatever else that's not that of a dollar, which is, again, more spending. And then that causes, because there's more supply of currency, more demand for the product that there's other products that they're looking for, it causes great inflation. And I really believe that we're going to be heading into some interesting times in the relative near future, basically the next 2 or 3 years. Okay, so 136.61. That's, if you're wondering how I get these numbers, I calculate it by math. High, which is like 420, divided by low, which is like 22-ish or so, to the roots of, this is 23.6, 38.2, 61.8, and 76.4. And then you multiply it again by the low, that's what you end up getting. Do I have an up target in here? Let's just do that for fun because I know how to do it. Look at this support in here just so. You know what? Yeah, that's the right. Yeah, let's do that. So we got support like $4 and 420 is a high. So I do 420 divided by 4. That's a little over 100, which is how big of a move it was last time. I mean, wow. So you do 420 divided by 4. And I want to know what a 61.8 downward retracement would be. So the number roughly around here, which would be, I don't know, like 15 or so. I guess 24 or so. Not even close. So 420. So I want to get the 61.8% down. So this number divided by this to the root of 1.618, which is the up target. So 420 divided by 24. That gives me a level of $2,500. So on the long-term time frame, what we need to see is first completion of retracement, because we had bullish run in 2017 going from $4 to 420. Then we have correctionary phase. Pretty much price correction, not that much in time, but from 420 down to that 20 or so dollar low. And although there's shorter term retracements that come and go all the time as well, we have the retracement now from this high and this low. And as it was going down from this low to this high, it had retracement, as the numbers shown. I gotta redo this again. Does this look right? Foreign. At 24, so where does 24 look on here? This just must be a bad log scale, I suppose. Well, let's just see here. 350 to 7 is double, which is that. And then 40 to double would be like up to 80. Anyway, why am I getting confused by this? Yeah, these numbers check out right. I just think this is a poor log scale, probably. With that being said, yeah, $2,500 is an up target, I would say, because you're in retracement mode from this low to this high. You're in retracement mode from this low to this high as well. And until it can get north of 420, it's still going to be in that. If it breaks down below 20, then it's in breakdown stages from the original move that's had plenty of correction, and it's still in the correctionary phase from the $4 lows and then the $400 highs. But obviously, we've seen these things fly when they want to. All we need is one major news event to just make something like this happen, because the low for March of 2017 was $3.69, and the December highs were 420. I believe it was 420. It was 304. Well, that might be why the Fibonacci was off. Or no, 420. It says 420. HF420. So 420 in December after under $4, $3.69 that March. 9 months, 10 months or so. It did 100x move. Now, what fundamental stuff can I think of here or what do I see in this chart that's telling me that at least that those moves at an extreme fraction are not going to exist? Thus, you're not even going to get an extreme. Meaning, if I get an okay fraction of a 100x move, we're going to have 40x move, or it's going to be half as wild as it was before. Okay, well, that's pretty still damn good. as it goes. Monthly term time frame. You see in the month of November how it really just barely breaks above the 18 average of highs, and what a productive month we've so far had in December. We've seen with the line going down, has come back down to the 18 average of highs, piercing above. Usually does that extra, not here though. Piercing or right back down to Fibonacci. Usually, again, we'd think, oh, you think it makes a better chance to go to 64. That's why with the 136, there's a bit more likelihood it's going to go to 140 than it would to 132 as a key high, or at least to 140. But I mean, look at the pretty much a perfect hit here in June. But it would be another retest of the 2019 levels. And I mean, double bottoms are a key term people talk about. You almost call this a double bottom, but it's got to get past the neckline. I mean, there's different objects you can say that it looks like. I'm not going to say any of them, but maybe a couple watermelons or something else. I don't know. Just sort of fruit object. I don't know. But regardless of the fact, breaking the neckline. Interesting neckline, that's the term that they use. But anyway, breaking it. Bye-bye as far as, oh yeah, we were down at this area. You see 200, 300 pretty fast. I mean, 200 would be a possible level of resistance, but I don't like to give too much crescence in the 76.4. And then I know it can be resistance, and it can be, heck, Bitcoin had a huge resistance level at 76.4 way back when. Well, that was when it hit 13,000 or 14,000, like well over a year ago. Like, well, yeah, a couple of years ago, whatever, back when it went from like 4,000, 3,000 even. It went from like over 3,000 to like 13,000 in 2019, start of the year, like nothing. And that was a 76.4 hit. But anyway, thank you for tuning in. Have yourself a great day. Bye-bye.